Hello, everyone. It's Michael Jaco with Unleashing Intuition Secrets, and I know you guys are excited about this one. Dr. Kirk's back with us. We're going to be talking about silver. Silver's on a tear, like we've been talking about for years. We were jumping up and down back when it was 17. You better be buying. It took another dive when the stock market dove, and we're like, it's time to buy again. Better get it. This last time you're going to see these numbers, and here we are. It's taken off. What do you see going forward?
Well, there's a reason for everything in life, right? And there's the reason why gold and silver are going up, but really, especially silver. Mm-hmm. So when you look at what Jerome Powell did at Jackson Hole, which was a couple weeks ago, right? But as you dissect his kind of Last Supper speech, I guess you would call it. I mean, it's literally, he's gone.
That's very good. Very good.
Yeah, he is going to be gone. This was his last speech at the Jackson Hole Federal Reserve Board of Governors, Central Bankers Confab, right? So Trump and him have been at it for since Trump took office, pretty much, right? So, and what is he saying? Powell is slow, he's stupid, he doesn't care about America, he's hurting people because people can't afford to buy homes. And Powell says, no, you've got these tariffs and it's bringing inflation. I can't lower interest rates. And Trump says, you've got to lower interest rates. It'll create jobs and that'll stimulate the economy. And so that's the battle, right? So at this speech, he went dovish, meaning that's very pro lowering interest rates to stimulate the economy. That's what that word will mean. So here's his speech, and I'm going to interpret it into layman's terms. He says, all right, everybody, we've got a dual mandate with the Fed. First one is to control inflation. The second one is to get full employment, right? So that's their dual mandate. Nothing wrong with that statement. So since Trump has been in office, what's been the focus on? The first mandate, controlling inflation, right? Because he says, well, we've got all these tariffs that are causing prices to go up. I'd argue that. We've got all this stimulus money that's causing, inflationary prices. It's like, okay, Jerome Powell, that's your fault. It's like, you're the one that prints the stinking money, right? So they've kept interest rates high, and this has hurt American consumers. Everybody who wants to buy a house, everybody who has debt, it's really hurting them, right? So that's going to put a damper on the economy, which I believe that's political. I believe Powell is not stupid. He's doing this to actually hurt Trump, right? So now, what's the other mandate? Full employment. So he says, we have these two mandates, either control inflation or get to full employment. We're going dovish, and we are going to actually focus now on creating full employment. Well, how do you create full employment? You lower interest rates, right? So when you lower interest rates, that reduces the cost of borrowing. People spend more. When people spend more, corporate America, mom and pop businesses become more profitable. People are buying their stuff. They have to hire more people. Now there's more money going into the system. This is exactly what Trump has been wanting. So Powell did a 180. It's like, all right, we're not going to focus on inflation anymore. We're going to focus on the full employment side, which is exactly what Trump wanted. Now, what do we think is going to happen to interest rates come September 17th? That's just a couple weeks away, when the Fed is going to announce if they're going to raise or lower. I think they're going to lower. I'm like, in a world where there's no guarantees, this is as close to a guarantee as I can get, right? I think if I were a betting man, which I'm not, I don't even like Vegas, but if I were a betting man, it's got very low energy city, right? So
that's why we invest in silver.
Yes, exactly right. Exactly right. I would say there's an 80% chance us getting a 25 basis point reduction. Maybe a 30% chance we get a 50 basis point, which is a 0.5% reduction. But at minimum,
that's what should happen. But we've called this in the past. You and I had nailed, and everybody else was like, no, well, on the fence. We're like, no, he's going to cut, and he cut. Yeah, he'll cut 25, but he should be doing 50. And so we're going to see 25, 25, 25, I believe.
Exactly. If he doesn't do 50, which is what he needs to do, we'd probably get 3 in a row of 25, 25, 25. That would be my guess.
Yeah.
right?
I agree.
So now, why would I say, what is some of the rationale that he's going to do a rate cut, right? So Secretary Bessent came out with he was in a speech, or gave a speech earlier this week, where he said, by this fall, we will have a national housing emergency that we need to deal with. Housing emergency. So why? Well, if you think about it, we've had these interest rates that have been high for too long because of Powell. You've got housing prices that are literally going through the ceiling, some of the highest housing prices we've ever had in the midst of a sluggish economy. Nobody can afford them. In some recent research, for a new home buyer who's buying their first home, it's twice as much on your mortgage payment than it is for rent of an equivalent sized place. Twice. So why would somebody buy if they could rent for half the price and they can't afford it anyway? Then you have to have like spectacular credit to even get a loan right now, because there's a liquidity trap. What's a liquidity trap? This is when the Fed prints money, injects it into the banking system. And what should the bankers do? Lend it out to stimulate the economy. That's the purpose of printing the money, putting it into the banking system. A liquidity trap says, we're getting the money, we're creating inflation by printing all of it, but we as banks, we don't think that we're going to get our money back. There's probably going to be delinquencies and defaults, and so therefore we're just not going to lend it out. Okay, that's a liquidity trap, where you're creating inflation and not stimulating the economy at the same time. That's like stagnation. Right? So that's what we've got. Now, what's one of the other big forces that we're looking at? This is a societal thing that's been eroding for decades. So I saw this chart and was doing some research on housing. And if you go back to 1950, and you do some studies on the number of 30-year-olds that are married, that own a home. Okay, so in their 30s, married, own a home. 52% of all those kids, I'm calling them kids because I've got a gray beard, of people in their 30s that were married, owned a home. Fast forward to today, 2025. Same range. 30-year-olds that are married, how many of them own a home today? Less than 10%. So why? Because they can't afford them. Wages haven't kept up with inflation. This is what Trump is trying to bring around. This is why he's got this attack against Powell, right? And it's like, Powell, you've got to lower interest rates to make things more affordable. It's the only way that the economy is going to be stimulated. Finally, Powell is capitulating, right? And so what's this going to do? Precious metals prices are going to go through the roof. Like in what we talked about before with the democratization of alternative assets and 401ks, that comes in February. Automatic demand for gold and silver and crypto in 401ks, which is a $12 trillion marketplace. Like, oh my word, that's incredible, right? That might be the biggest thing to gold and silver and crypto ever, is that bill, that executive order that was.
I think we're going to see everything goosed. I think stock market's going to take off because it's crack money. It's going to be very low interest money, and money's going to flood into the system again. And people are going to use that to buy more stock, and stock market's going to go up. Crypto's going to go up. Silver and gold will go up as well at some point because of the housing, like you're talking about. I remember back in the 80s, the time frame you're talking about, when it was 31 was the average age. I bought a home, a condo. I was 27 at the time. And now the average age is 56.
Oh, wow.
For people buying a home. It's insane. That's why those numbers you said, 10% for people are there. Everyone in the SEAL teams had homes when I was in the SEAL teams. Everybody had homes or condos. But not so much now. Yeah, it's ridiculous. So it's got to come down. It's got to come down. At some point, it will crash. And we've already talked about what's going to happen with silver and gold. They're going to go to extreme levels.
The extreme. Now, you start to add up all of the different factors that cause gold and silver to go up, right? Low supply, high demand, black swan events, inflationary pressures, tariffs. like the tariffs on copper and aluminum, that's going to really impact the price of silver. You've got, no matter how you look at it, whether it's a flight for safety that causes demand to increase because foundations around us are eroding and people want something that's real and tangible, or because of simply the inflationary pressures, or because of normal business cycle activity. When you lower interest rates, the economy is going to grow. When the economy grows, the industrial demand for silver, which is 90% of it's going to go up. Now, here's something that happened this week that's really big that pretty much nobody's going to talk about because they're going to view it as small potatoes, but it's not. To me, it's a monumental shift in psychology of investors, but not regular investors, like sovereign wealth funds. So Saudi Arabia has like the largest sovereign wealth fund on the planet, right? So what did they do? They decided we're going to start investing into silver. And they bought, okay, so the number is going to seem insignificant. They bought $30 million worth of silver. Thinking, okay, that's small potatoes, right? However, it is in the grand scheme of things. But the bigger picture is first time a government or a sovereign wealth fund has said, we're investing heavily into silver, because normally countries only do gold to back their currency. Their central banks only do gold, right? So what's going to happen next? Other sovereign wealth funds, other countries are going to start investing in silver. Why would they do that? So the economists at the sovereign wealth fund for Saudi are very smart. I mean, they're not stupid people, right? They're brilliant. They're saying, well, good grief, low supply, high demand. Silver's already up well over 40% year to date. Let's start throwing money into this thing, right? And they're seeing it as a critical metal, right, that's needed for military industrial complex and solar and nuclear power and everything else. And they see that it's in low supply, so they're allocating into it. Now, the demand for silver is 90% manufacturing, 10% investors like you and me. And we've seen these massive increases. What was not in that equation? Sovereign wealth funds and governments, right? Now that they're going to enter into the fold, guarantee you, they're going to be way bigger than the individual investor. It's going to diminish supply even more. And Michael, I'm not a chartist, you know that. You're more of a chartist than I am. I look more at the fundamentals, right? But when you look at what silver has done, there's been some major resistance points, throughout this bull market starting at 17. 40, which is what we just went past, wasn't a technical resistance point. It's more of a psychological one because it's a nice round number. Like when everyone's saying, oh, we need silver to go above 20 and above 30 and then above 40, right? So not much of a technical thing there. The technical came at like 35. Next one, there's one at 42, a little bit dinky one, and then 48's the big one. So we have very little resistance now that we've gone past that last psychological barrier of 40. And I think we get to 48 really quickly. Like probably like within a couple of weeks, kind of quickly would be my guess. And then you'll probably hit big resistance, right? I think now if it blows through it, it goes sky high because it blew through it. But you're probably going to bounce around at the 48 level for a while as it consolidates, build a new base. But then you know what? There's no more resistance points like ever. Because we've never been higher than that before. There is no technical pattern above 48. So we're on the verge of really, like, if you look at the cup and handle formations, right, that you can find on X, and you've looked at them, we're on the verge of going into the handle, which is like parabolic type growth. And that's exactly what we've been talking about for years on this program, Michael. And this is where we're now headed. And it really excites me.
So I'm sharing it on the screen right now. It's the giant cup and handle. We're right now at the point where it was back in the 80s, 1980, I think it was. So we're just above that. So we're broken above that resistance point, like you're talking. And you said it, you called it was around 4150. So we're just playing with that area right now. And this is normally what silver does. It spikes. It goes sideways, builds a base, and it spikes. And that's what we've been seeing all year, except for that one little, stock market plunge in April. Silver, everything got sold. And silver came back with a vengeance after that because it was way oversold. And now we're seeing these new highs. So if you add the normal technical from 350, which is the low of the cup, to the high at 50, it's like 14.28 is what you're going to come up with. And then you take that number, and from the breakout point, which I'm going to say is probably going to break around 50. That's the breakout point for me, but some people are saying it's already done that. But regardless, if you take that number and add it to that 50 or 40, you're looking at $600 or $700 silver. So this is one of the greatest cup and handles in history that we're looking at right here. Nothing like this has ever happened in anything. So yeah, it's going to be monumental going forward.
When was the bottom end of the cup? What year? Because this is like a 50-year formation plus that we're seeing.
Right. I think that takes us all the way back. Let me look at that. Looks like 92, around 92 time frame.
92. So 92, 02, 12, 22. Yeah, it's like over a 30-year chart that's taken to build that formation. Literally, this is almost like a once-in-a-generation opportunity.
Totally. Multi-generation, because you can look back through everything, and even back, some people are saying throughout all of history, there's never been anything like this. So it's like the Gordian knot. So the Gordian knot,
who has a Gordian knot laying around?
It just happened to be here. A Gordian knot. Yeah.
No, I got one in my back pocket here.
It's like if you can figure out how to untie the Gordian knot, you'll be the ruler of all of Asia. And so he tried to untie it. So he took a sword out and chopped it. And it's like, okay, it's untied. So from that, it was called a bold, decisive, or unconventional action. And that's what I believe silver investors are.
Sorry, it's like talking about a Gordian knot. No, by the way, I happen to have one right here.
Random, right?
No, but you're right. Like when you look at some of these things that seem like, are these things even possible? We've never seen this in our lifetime, right? Because it takes forever for those formations to establish themselves. And we happen to be alive when you've got, and look, we don't have geopolitical conflict because the cup and handle pattern, right? We've got the cup and handle pattern because of human psychology and how history kind of repeats itself, and things get overbought, things get oversold. You've got wars and rumors of wars. You've got agricultural patterns. You've got monetary system failures. I mean, this is what causes that. And so charts don't cause things to happen. Things cause charts to happen, right? And we're at this point where we have to ask ourselves, do we see, honestly, Russia and Ukraine conflict ending tomorrow? Doubt it. What about China, Taiwan? Doubt it. What about the BRICS nations? Are they just going to go to sleep and pretend like they never really wanted to control the world? No, not going to happen either. What about the centuries or millennia long fight between Arab and in Israel, right? Those Arab nations in Israel. Well, that's not going to go away anytime soon. What about bankers and like lustful greed for money, right? And usury. And I mean, this goes back all the way to when the Rothschilds developed banking way back in the day. It's like these things aren't going to change. Now, Trump can bring America back to prominence, but the big global picture, that's not going to change. We get to take advantage of the global debt scenario, the inflationary spiral globally, and hopefully Trump brings America back to the top of the heap, makes us the pick of the litter again, right? And so, but everything that we're seeing is inflationary globally, geopolitical conflict globally, a debt spiral globally, systemic banking failures globally as they're undercapitalized. Take advantage of those trends because none of those we can change on our own.
Yeah, that's true. And we're looking at the price of gold and silver right now. When you might remember in Burl Ives, he used to, and Rudolph the Red-Nosed Reindeer, he's like, silver and gold, silver and gold. So I sing that to my people almost every day. So it's great because right now we're seeing gold up, tremendous amounts. It's 43,647 on the COMEX right now. Silver is 41.49. It's kind of floating. It broke above 42. It's kind of doing that sideways thing. It's building a base till it takes off again, like it normally does. But it's not taking long these days, especially now that the dollar's collapsing. So the Fed, everybody knows the Fed's going to cut, and that's going to cut the dollar. It's going to cut the value of the dollar, and that's going to send silver and gold even higher. They're already responding to that. So 3 rate cuts, as we're talking about, that's really going to bring the dollar down quite a bit, and silver and gold will go higher. Yeah, and eventually it will go much higher because the stock market eventually is going to crash. We'll probably see a little bit of a pullback with silver and gold, and then it'll take off, and it's going to just go to the moon, just like it's always done in the past, like we saw in 1980, like we saw in 1929, like we saw in 2000. All the stock market crashes, there's a little bit of a pullback because it's a sell everything, and then it takes off. So if you're buying now, you're probably going to see double what it is right now before this is over, maybe even more. Might see triple digits before the stock market loses steam. So it's going to be amazing going forward with the prices.
Absolutely, 100%.
And so you definitely want to be with Dr. Kirk Elliott. We talk about this all the time, and I know a lot of you guys are getting off the fence now because it's like FOMO. Every time silver takes off, you should have been in already, but it's okay because you're still going to make a lot of money long term in silver. KEPM.com, and you can go in and give them a call. Go in and go into the contact information. Hit the contact information. The phone number is 720-605-3900. And you're going to get a free consultation. You don't get that with anything else. So it's definitely a great deal. I know many of you guys have taken advantage of that and have done really, really well. What is the most that people are doing right now? Are they just coming in and buying and put it in the in storage, or how are they buying right now?
They're buying any way humanly possible. I mean, it's literally, the busiest I've ever seen it in this industry since 2002 was a few years ago, Silicon Valley Bank failure.
Yep.
People thought they were going to run out of money. They thought there was going to be banking failures all over. And literally 5 of them, it changed banking and changed people's perception of what's safe and what's not. That was the busiest I've ever seen this industry ever. Now what we're seeing is a close second. We're not quite as busy as that, when I look at call volume, but we're getting close. And I have a feeling the worse these things become, this will surpass that. Because what we have now that we didn't have then is ultra low supply. LBMA basically running out of silver. COMEX not having enough to fulfill the request for physical deliveries. We're embarking on something that we didn't have during Silicon Valley Bank days. This is going to be, I can just feel it. I can feel it in my soul. This is going to be a big move.
Yeah, I've like we talk about almost every show. I was a little boy and I was investing in silver. So I've got well over 50 years of experience watching and handling silver, and I've never seen anything like it. I profited massively on the last one, and I kicked myself in the butt because I was getting intuitively buy more silver. I'm like, I got time, and then it went woo. It took off, kind of like what it's starting to do now. So we've been trying to get everybody off the fence and get the silver. This is, I think, one of the last times you're going to see silver at this point. Even here, it's going to be double, triple what it is right now, and like I said, it could be 10x from where it's at right now, very easily, and maybe even 20. So we're going to see some significant numbers going forward.
Significant. Take advantage now. I'd rather be a few months early than a day late.
Absolutely.
Yeah.
And we've been saying it for a while, but it's still time. Still time. Yeah. All right. Dr. Kirk Elliott, thanks so much. Always a pleasure and an honor to have you on. You're so knowledgeable. People have been saying you're like gold. you're King Midas. You're got the golden touch. So of course, silver. Silver is the golden touch until we get to a point where we've talked about where you're going to start to convert your silver, which you're going to have a lot more ability to buy even more gold. If you were to buy gold now, you wouldn't have the same ability of buying the numbers of gold if you bought silver right now, because silver takes off faster. We start the dollar cost average over in the gold, and then eventually gold takes off and surpasses even the silver run. So great strategy.
Yep.
You can buy all the homes that you want because home prices are going to be
they'll tank.
All right. Thank you, sir.
You bet.
Next time.
Sounds good. Bye-bye.
Bye.